Welcome to the Deep Dive, where we take the information you need to know and cut straight to the insights that matter.
That's the plan.
You've flagged the latest quarterly report from DroneShield Limited, that's ASX ticker DRO. It came out April 22nd, 2025, covering the quarter ending March 31st.
Yep, hot off the press, relatively speaking.
So our goal today, let's really unpack the key performance indicators, the significant developments, give everyone a clear, concise understanding of where DroneShield is heading.
Exactly. It's a pretty dense report, as these often are. Our job is to, boil it down. What are the essential takeaways? Put some context around the numbers and what they actually mean for DroneShield's path forward in this dynamic counter-drone tech space, CUXS.
Okay, yeah, let's unpack this. Starting at the top, revenue. The report shows a really significant jump in Q1 2025, $33.5 million. Can you put that number into perspective for us?
Yeah, that $33.5 million, it's definitely a headline figure, and for good reason. If you compare it to Q1 2024, where they reported $16.6 million, well, you're looking at a 102% increase.
Wow, doubled.
Pretty much. And what's really notable isn't just the growth rate itself, that this is actually their highest revenue quarter ever, period.
Higher than Q3 2023. I remember that one was driven by a single big contract.
Exactly. That was $27.7 million. This new record suggests, maybe a broader base of success across different contracts, different clients, not just relying on one massive deal.
Right, the diversification is key. And it looks like this momentum isn't just a one-off thing. They've got a lot secured for the rest of the year already.
Precisely. As of April 14th, they had already announced $94.4 million in received or committed purchase orders, EPOs.
$94.4 million already locked in for 2025.
Yeah, and to really grasp the scale of that, think about their total revenue for all of 2024, which is a record year for them. That was $57.5 million.
So they've already, significantly surpassed last year's total revenue just based on orders committed by mid-April.
Exactly. It shows really strong current sales traction. And importantly, for understanding their potential going forward, any new POs announced after April 14th, that's just going to be on top of this $94.4 million figure.
Okay, good point. Let's move from revenue to the actual cash coming in the door. Cash receipts also showed strong growth.
They certainly did. Q1 2025 saw cash receipts hit $16.7 million. If you compare that to the $7.1 million in Q1 last year, that's a 135% jump.
Another big increase, so a healthy influx of funds.
Yeah.
But there's a gap, isn't there, between the $33.5 million revenue and the $16.7 million cash receipts?
There is, yeah. And the report touches on why.
What's the key thing to understand there?
It boils down to timing, really. How revenue gets recognized versus when the cash actually hits the bank account. DroneShield recognizes revenue when the hardware is delivered to the customer.
Right, delivery triggers revenue.
But the actual payment, that might be scheduled for later, often in the next quarter. The report specifically says payments for several Q1 deliveries are actually expected in Q2.
Okay, so the revenue's booked, but they're still waiting on some of that cash.
Got it. Exactly.
Now let's unpack their software as a service SaaS revenue. That saw some really impressive growth, almost tripling year over year.
Yeah, this is significant. The trend here is what's important. They reported $1.67 million in Q1 2025. Compare that to $561,000 in Q1 2024. That's a massive 198% increase.
Huge growth.
It really points to them successfully building up those more predictable, recurring revenue streams. That's something the tech industry, really values.
And it sounds like this growth might even accelerate. What's driving that expectation?
Well, the main driver they point to is the upcoming launch of their next-gen hardware products, expected in 2026. Their whole SaaS model revolves around providing regular, quarterly AI software upgrades for the DroneShield hardware customers already have.
Okay.
And given how fast drone tech and, the threats are evolving, these updates are pretty essential to keep the hardware effective. It's kind of like, keeping your antivirus software up to date. It's critical.
So the value isn't just the box they sell initially, it's the ongoing support that keeps it working against new threats.
Exactly. As their hardware gets more sophisticated, the software updates become even more crucial for its function. That's why they're anticipating a significant rise in these recurring SaaS revenues. They're also planning to roll out more SaaS offerings too.
Boy.
like the Drone Sentry C2 Enterprise Edition. That's expected within the next year or so. It just further builds out that recurring revenue side of the business.
They also mentioned improving their customer portal, the online interface.
Yeah.
How does that fit in?
Right, the DroneShield Access Portal upgrades, that's really about enhancing the customer experience and making it easier to deliver the SaaS updates. It's where customers manage subscriptions, get the latest software.
Streamlining things.
Yeah, and adding new tools like the UAS incident platform and a 3D planning tool just adds more value to that subscription, making it stickier for clients.
Okay, let's shift focus a bit. Financial strength. They reported a cash balance of $197 million. That sounds pretty substantial.
It is substantial. That figure, as of April 14th, puts DroneShield in a very strong position financially.
What does that kind of cash allow them to do?
Well, the key takeaway is flexibility. It gives them considerable resources to really go after their growth plans in this rapidly expanding CUXS sector.
How might they leverage that cash?
The report mentions a few priorities. First, just continuing to invest heavily in the business itself, attracting and keeping the specialized talent they need, which isn't easy in this field.
Right, talent is key.
Second, it gives them the financial muscle to potentially look at strategic acquisitions, companies that could complement what they already do or expand their market reach.
M&A possibilities.
Could be. And third, it lets them invest in longer-term R&D, the next big things. Plus, it's worth noting, they have a clean balance sheet, no debt.
That's always good.
And they use stock options, too, trying to align employee interests with shareholder value.
Okay, and talking about investment, the report highlights their ongoing commitment to future tech. What's the core of their R&D strategy?
At the heart of it, they really believe in radio frequency RF technology. They see it as the fundamental way to both sense and neutralize drones. That's their core focus as drone tech keeps evolving.
But they also mention being an integrator. How does that square with the RF focus?
Good question. They recognize that some customers, especially those with, say, really high-stakes security needs and bigger budgets, want a more comprehensive, layered system.
More than just RF.
Exactly. So in those cases, DroneShield positions itself as a systems integrator. They can bring in sensors and effectors, the countermeasures from other specialized companies, and tie it all together into one user-friendly platform.
So they're not trying to do everything themselves necessarily?
Right. It's more about meeting customer demand for a single, cohesive solution rather than making them manage lots of separate systems. RF is still their core expertise and where their own product development is focused, but they'll integrate other tech when it makes sense for the customer solution.
And when might we see some results from this R&D investment? New products.
The report flags 2026 for the release of several next-generation DroneShield products. They're banking on their decade of experience and that large engineering team, over 200 engineers, to develop these new platforms.
Which will be supported by the SaaS updates.
Exactly, but they also have this strategy of releasing sort of minor hardware updates more frequently. Like in Q1 this year, they released new variants of the Drone Gun MK4 and the RF Patrol MK2. So a mix of big leaps and incremental improvements.
Let's unpack their operating costs and inventory management. Key signs of operational health.
Definitely. The report gives a baseline for their fixed cash operating costs, roughly $6.5 million per month. That excludes variable costs like making inventory or sales commissions.
Okay, $6.5 million baseline.
But it's important to note the reported cash operating costs for Q1 were a bit higher because of some one-off expenses they don't expect to see again.
What kind of one-offs?
Things like external recruitment fees as they were scaling up the team quickly. They expect that to decrease as they build more internal capability. Also, some consulting and legal fees for setting up in new international regions.
Growing pains, sort of.
You could say that. And costs tied to implementing new ERP and CRM systems, big IT upgrades to support future growth and efficiency.
Right, investing in infrastructure.
And one other nuance there, operating costs look lower on a profit and loss statement because they capitalized $3.2 million in R&D expenses in Q1. That treats R&D as an investment in future revenue, not just a current cost.
Okay. And inventory. $70 million sounds like a lot of stock to be holding.
It is a significant amount, yeah. $70 million book value, which includes finished goods and components. They point out the actual sale value is higher because of their margins.
Why hold so much?
The main reason is lead times. The sophisticated components they use, which give them their edge, take time to procure and assemble, typically 3 to 4 months. So having inventory ready means they can deliver quickly when an order comes in. That's a big advantage.
But isn't there a risk of that tech becoming obsolete, sitting on a shelf?
They address that. The quarterly AI software updates help mitigate that risk by enhancing existing hardware capabilities. Plus, they say they manage inventory levels carefully based on their sales pipeline forecasts and when they plan to introduce new hardware generations.
Okay, speaking of the sales pipeline, reported at a robust $1.6 billion. What are the key drivers feeding that number?
So that $1.6 billion, that represents the total value of sales opportunities they've identified and are actively chasing for 2025 and 2026. The report breaks down where this demand is coming from regionally.
Europe and Ukraine seem significant, almost a quarter of their revenue recognized so far this year.
Yes, 24%. That's largely driven by, well, increased defense spending across Europe. You hear about the Rearm Europe plans and obviously the ongoing war in Ukraine. Drones are huge there, so counter-drone tech is critical.
And a DroneShield is positioning for that.
Absolutely. They're aiming to get included in military aid packages for Ukraine, and they're setting up a European manufacturing and sales hub. That $8.2 million contract back in December is a good example of their traction there.
Asia's another big slice, 23%. What's happening there?
They're seeing a real ramp up in Asia, particularly in countries neighboring China. Governments are starting their own CUSS programs as small drones become more common. The big $32 million contract announced April 14th really highlights this.
And that followed another one from the same customer in January.
Exactly. $11.8 million in January, then $32 million in April. Clearly a growing market for them there.
The U.S. is still major, 22%, but the dynamics seem to be shifting a bit with tariffs.
Yeah, the U.S. is still crucial, but its share might become more balanced as Europe and Asia grow faster. They expect to pass on the cost of tariffs for shipping from Australia, probably because their tech is specialized.
And tariffs on Chinese goods might actually help DroneShield competitively in the U.S.
Potentially, yeah. The report suggests it could create supply chain issues for some of their U.S.-based competitors who rely more on Chinese components. Interesting dynamic.
What about the Middle East and the U.K.? Both look promising.
The Middle East, that's 16% of revenue so far. Opportunities for both big integrated systems and standalone products. They have a dedicated salesperson based in Abu Dhabi driving that.
And the U.K.
That's 10%. Key contracts with the Ministry of Defense, a partnership with BT. Plus, the UK government plans to boost defense spending to 3% of GDP by 2029, which is a positive sign for them.
Even Latin America and Australia are showing potential, though smaller percentages right now.
Right. Latin and South America is 4%, but expected to grow. They had that $9.7 million contract in January, managed out of Mexico. Australia is currently small, less than 1%, but the big long-term opportunity is the Land 156 defense program. They're bidding on several parts of that and scaling up their Aussie operations.
Okay. And then there are these emerging markets, airports, and drones as first responder programs.
Yeah, airports are showing substantial global interest in CUXS. DroneShield hired an experienced exec just to lead that specific sector strategy. And DFR, Drone as First Responder, using drones in emergencies that's gaining momentum too, could be a big non-military market down the line.
The report does mention that the really big deals, over $30 million, take longer to close.
That's an important point. These larger CUXS program acquisitions often involve complex procurement processes, more approvals, so the sales cycle is naturally longer. They currently have 10 opportunities of that scale in their pipeline.
So a strong pipeline, but patience is needed for the biggest fish. And of course, no guarantee they all convert.
Exactly. Standard disclaimer, but important context.
Okay, just quickly on their team and manufacturing capacity. They've grown the team quite a bit.
They have. Up to 306 staff now, and a huge chunk of those 217 are engineers focused on the tech development. The plan is to reach about 330 staff by mid-year.
And they expect more productivity from recent hires settling in.
Right. They also highlight their access to tech intelligence from places like Ukraine and the Middle East through customer relationships. Plus, sales staff on the ground in key regions and experienced advisors.
And can they actually build enough product if these big orders come through? Manufacturing capacity.
They seem confident. They state their current setup, their own facility, plus 2 outsourced partners can support up to $500 million in annual revenue. So, room to grow significantly.
Lastly, there's the standard mention of payments to related parties.
Yep, just transparency. Board fees for non-exec directors and the CEO's salary totaled about $349,000 for the quarter. Standard stuff for listed companies.
Okay, let's bring it all together then. As we unpack this Q1 report, what are the absolute essential takeaways for DroneShield?
Well, to really summarize what we've unpacked, First, really strong revenue growth, showing momentum. Second, that SaaS business is expanding rapidly, building recurring revenue. Third, they're in a very healthy financial spot with that big cash balance.
Giving them options.
Exactly. Fourth, they're clearly continuing to invest significantly in future tech, particularly around RF. And fifth, they've got a robust sales pipeline fueled by growing global demand across key regions and sectors.
So the overall picture emerging is a company hitting its stride, experiencing significant momentum, executing a clear strategy in a market that's only becoming more critical.
I think that's a fair assessment. These key points give a pretty concise snapshot of DroneShield's performance and financial health as of Q1 2025. It highlights their achievements, but also their potential in this counter-drone space.
Right. And on that note, maybe here's something for listeners to think about. We see increasing global instability, drone technology evolving constantly, threats changing. How might DroneShield's continued focus on innovation, combined with their expanding global presence, position them to really capitalize on sustained growth in the years ahead? Definitely something worth mulling over. Thanks for diving deep with us today.